Hi, this is Mitch Milat with Riviera Financial Mortgage in Beverly Hills. Another day in the mortgage business. I want to let you know that I really appreciate you letting me assist you in getting the best mortgage financing for your home purchase or refinance. Also want to let you know that I keep an eye on the market and developments, and I'm always trying to keep you in front position so that you're ready to take advantage of any opportunity or have the best solutions to any problems that might arise. So with that in mind, I put this little informational message together. Please just take a moment to watch it. Let me know what you think, and let me know if you have any questions that I can help you with. Thank you so much.
It seems like you've been trying for years to save enough money for a down payment for a home. You've cut corners, taken lunches to work, and yet home prices continue to rise, and your dream of owning a home seems out of reach. Guess what? Maybe you're closer to owning a home than you think, because for many loan programs, you don't need to have 20% for a down payment to buy a home. No matter how much you may have saved, there's probably a mortgage program that can help you get into a home. Let's take a look at a few options out there. We'll begin with the FHA home loan. FHA loans allow for a 3.5% down payment. FHA loans are insured by the Federal Housing Administration, or FHA, and these loan programs are perfect for first-time homebuyers. FHA loans require mortgage insurance premiums, or what is called MIP. FHA loans are also assumable, which means that a future buyer of your home can purchase your home with its FHA loan and its mortgage rate still attached. You could actually pass today's rates on to tomorrow's buyer of your home. That's pretty cool. Another great low down payment program is the Home Ready Mortgage. The Home Ready Mortgage is a low down payment loan available through Fannie Mae. The Home Ready program allows for 3% down, grants access to below market mortgage rates, and offers discounted rates for private mortgage insurance. Home Ready also gives you the ability to use income from everyone who will be living in the home toward the actual mortgage approval. This can include parents earning pension or Social Security income, or roommates who want to all go in and buy a home together. The Home Ready program is available in low-income areas with a high minority population, and areas affected by a natural disaster. However, you do not need to be a low-income household or a minority to get approved. You must only buy a home in a pre-approved area. The next low down payment program option is the conventional 97, which is a 3% down payment loan program. The conventional 97 is a special program which was recently reinstated by the Federal Housing Finance Agency. They are the parent of both Fannie Mae and Freddie Mac. The conventional 97 requires a down payment of just 3%. The program also allows a buyer's down payment to be gifted by a third party, so you really don't have to have your own money for a down payment. The only requirement is that the person who is gifting the money for the down payment is a blood or marriage relative, a legal guardian, a domestic partner, or fiancé to the buyer of the home. The conventional 97 mortgage is limited to $510,400, regardless of your local mortgage loan limits, and multi-unit homes are not allowed. The program is also restricted to fixed-rate mortgages only. The conventional 97 program may cost more on a monthly basis than other loan programs like FHA, but you can cancel the program's mortgage insurance in as few as 12 months from the date of purchase. So in the long term, your monthly payment may be less once the mortgage insurance is canceled. Next, let's look at the Good Neighbor Next Door program. The Good Neighbor Next Door program is a special U.S. Department of Housing and Urban Development, or HUD program. This mortgage program allows buyers to purchase homes with just $100 down in approved Good Neighbor Next Door areas. The program is available to members of law enforcement, firefighters, or emergency medical technicians, as well as teachers of pre-K through 12th grade. Buyers in the Good Neighbor Next Door program may qualify to receive a home purchase discount of 50%. Seriously, you could get the house for half price. Now, you must agree to live in the home as your primary residence for 3 years or 36 months. This means that if you buy a home for $200,000 with a Good Neighbor Next Door program and live in the house for 3 years, you will be forgiven $100,000 on your loan and get the home for $100,000. The Good Neighbor Next Door program allows buyers to use FHA, VA, or conventional mortgage financing. Definitely worth a look at if you're a teacher, law enforcement officer, firefighter, or first responder. Another fantastic low down payment program is the VA Home Loan. If you have served our country, first, thank you for our service, and second, you have a great benefit with the VA Home Loan. They may not have told you a lot about the VA Home Loan in boot camp, but it is a pretty cool benefit that you should definitely consider. VA Home Loans are loans which are guaranteed by the Department of Veterans Affairs. VA Home Loans are available to active duty members of the U.S. military, honorably discharged service members, and many surviving spouses. VA Home Loans are among some of the best low and no down payment mortgage programs that are available today because they require no down payment whatsoever and never require the buyer to make a mortgage insurance payment. The VA Home Loan can be used for most any type of home, including single family, condo, and multi-unit. VA loans, like FHA, are assumable by future VA homebuyers. Interest rates for VA home loans are typically the lowest for the 3 major loan programs, which are VA, FHA, and conventional. Next, let's look at another great no money down option with the USDA loan. The USDA loan is guaranteed by the U.S. Department of Agriculture and allows for 100% financing. USDA loans are often thought of as rural loans, but they are also available in many non-rural areas, including within many U.S. suburbs. One of the biggest benefits of the USDA loan is that its mortgage rates are often the lowest of all the low and no down payment mortgage programs, and its mortgage insurance requirements are also pretty low. In order to qualify for a USDA loan, the income of a home buyer's household may not exceed the local median income by more than 15%. However, large households are granted certain exclusionary rights. Next, let's look at conventional mortgage options with private mortgage insurance. If you're looking to get into a house with less than 20% down, a conventional home loan with private mortgage insurance may be an option. Private mortgage insurance, or PMI, is a type of mortgage insurance that protects your lender if you stop making your payments on your loan. PMI only applies to conventional loans, but other loan programs like FHA requires mortgage insurance too, although mortgage insurance on FHA loans operate differently than PMI. How much money you put down plays a role in determining how much PMI you'll have to pay. A small down payment means a bigger risk for the lender, so your PMI will cost more. The type of loan you get, like a fixed rate mortgage or an adjustable rate mortgage, will also affect how much your PMI will cost, as will your credit score. One of the biggest advantages of PMI is that you may be able to get rid of private mortgage insurance at some point in the future. This means that after what you owe on your mortgage is below 80% of the value of your home, you can write to your lender and ask them to remove your private mortgage insurance. If you qualify, it would mean that your monthly payment would decrease. PMI gives you the option to get into a home with less than 20% down, which could help you realize your dream of home ownership. Finally, let's look at what is called a piggyback mortgage. The piggyback mortgage is not really a mortgage at all. In fact, it's really two separate mortgages. It's called a piggyback mortgage because one mortgage is piggybacked on top of another in order to borrow 90% of a home's purchase price. This loan is also sometimes called an 80-10-10 mortgage. The piggyback mortgage allows the buyer to put 10% down for a down payment. This allows you to avoid having to pay mortgage insurance. Instead of one loan, you have two loans. The first loan is typically a conventional loan and is approved at 80% loan to value of the home's purchase price. The second loan is typically a home equity line of credit or a HELOC. That is 10% of the loan to value. Piggyback mortgages are often used by homebuyers who plan to pay down or reduce the balance on their second mortgage within the first 24 months of homeownership. Whichever loan program works for you, it's important to remember that you have options and you may not need to wait to get into your dream home.
Thank you for watching my video. I hope you found it helpful, and I hope you would like to discuss it further. So if you would, please feel free to call me, Mitch Milat, Riviera Financial Mortgage, 424-290-8294. You can also email me, mitch@rivierafinancial.com. You can also find me on Instagram @MitchellMilat or on my Facebook homepage, Mitch Milat, Riviera Financial, Beverly Hills. Thank you so much. Look forward to talking to you soon and wishing you much success in the future.